today's YouTube video, we will have a look at the current situation for Ethereum, the current price structure, what we think is going to happen next. We will be saying exact price levels we will be watching, what we are doing ourselves with our trades, and to reason all of this, we will be looking at the liquidation heat map and also some more in-depth data. Let us, however, start with our structural analysis. For this, we use Elliott waves like we do in all our analysis, also with Bitcoin and Solana. And what we think has happened is that a wave 3 has topped on the 6th of December. And since then, we've seen a wave A to the downside, a wave B to the upside, and are now in a wave C to the upside. And we've had this scenario on the chart for quite some time. And up until this point, it is still valid. Now, what do I mean with still valid? Well, this is one of the support boxes, or rather the support box for this wave 4, meaning this needs to hold in order for this setup to be valid. And as you can see, let me just zoom in a bit more on this. The price is basically at the low end of this support box right here at $3,021. We've shortly breached that, but we have not had a sustained break below those $3,000 and have since gone back up to 3,100 at the time of this video being recorded. Now, what do we think needs to happen? We will get into that in 1 second. Let us first look at the liquidation heat map, which gives us a reason for why this dip happened in the first place. The liquidation heat map is basically showing where the liquidity sits, where long and short positions are sitting, where they need to be liquidated, why market makers might be interested in this. As you can see, there's a huge liquidity zone down here, and we went and grabbed it. If you want to understand more in depth how this works, on our course, in our membership, we teach exactly this and a lot of other things. If you're interested, it's the first link in the description. Check that out if you're interested. But again, let us dive into this heat map. I will explain all the relevant things for the current moment in this video, of course. What you can see, there was a huge buildup of liquidity, which actually started on the 20th of November. So quite a long time ago. Since then, we've seen the rally and the drop. Now, this needed to be liquidated because there was just too many longs, and market makers were really interested in actually liquidating this area for their own benefit and for, well, the detriment of all of the people who went long around this price point. Again, if you want to have a more in-depth understanding of this, I recommend to check out our membership. So now we've collected this liquidity area. What is the next thing we can retrieve from this heat map? Well, there is not necessarily a lot of liquidity below. Yes, there's a cluster here, but there isn't a lot below. And now you could say there also isn't a lot above, but there is more immediately above than immediately below it. So it would make more sense moving the prices higher for market makers to liquidate all of these areas where people are going short. Also, because sentiment has sort of flipped, people are probably going to be shorting more in the next coming days and weeks, which is going to drive those liquidity zones even bigger, meaning more liquidity above us, which market makers are interested to force out of the market. Of course, all of this is not financial advice, and this is just our opinion. Now let us look at this data. And again, as I always say, do not be worried by what you see. It is not that complicated. I will explain all of this. What you see up here is just the ETH price, and below here is the open interest. This is basically the accumulation of all of the leverage positions in the market. So this is for both long and short put together. And what do we see is that while price was going down, I will draw a line to visualize this. We'll go from this local top to where we are currently with price. Prices have decreased. And what happened to open interest? If we go to the same point here, they first increased, but have since then steadily decreased. So price is going down, open interest going down. What does that mean? While the price was moving lower, less and less leverage positions were in the market. Why could this be? Well, as you can see here, a lot of people were liquidated around this level, which were in long positions, which caused this dip in open interest. How can we further interpret this? We will look at down here, look at the funding. Ignore these two for right now. I'll get to those in a second. let's look at this funding. If I draw the exact same line I draw above, starting at the exact same point, drawing it to the same level, you see there's also been a decrease in funding with a really big dip around the same time that we had this really big wick, which is sort of also an advocate for my thesis that a lot of longs were liquidated here, as you can also see on the liquidation heat map. What has since happened? Prices have increased. Funding has also increased, but open interest has basically been going down steadily, which could be a sign for more shorts and longs coming into the market, which is not necessarily what we want if we want to see prices turning around. But at the point of the video, it's not to an extent where you would say we need to have another liquidity flush. Now, let us look again at our structural analysis, and now I will get into what we exactly are watching for here and what we think is going to happen next. I will take this off the chart, and it's still the same scenario I explained earlier. Remember, A, B, and a C wave into the support box. And what are we watching for here right now? Well, for wave 4, this is a Fibonacci retracement support box. And these are just ratios we use to basically anchor where we look for prices. They are quite heavily used in the Elliott wave space. And we also really like to use them, and they work great for most of the time for our trades. And for this wave 4, usually it retraces. I will edit this so you can see it better. Usually it retraces somewhere between the 0.382 and the 0.5 level, somewhere in this box. Now, as you might be able to tell, we have retraced far deeper than that. Retracing to the 0.618 level for wave 4 is completely okay. It's, in my opinion, preferred if we don't retrace that deep, but it is still, by the thesis, it is still valid. We have not crossed the wave 1, as you can see down here. It's perfectly fine. It's a deep wave 4, but it's okay. Now, what do we need to see right here? I will draw it on the chart. What we need to see here, and you can check this for yourself by the time this video comes out, how the market has reacted. We will need to see a 5-wave move to the upside, and it needs to be quite decisive. This doesn't need to be incredibly impulsive, but we would prefer if it would be, well, faster rather than slower. It's decently important that this moves out of this zone right now. We can consolidate for a bit longer and then we move out of this. But since it's the start of the week, it's not the weekend, nothing, no catalysts basically slowing us down artificially like the weekend would, because usually on the weekend we have less trading action. We basically are looking for a turnaround here. And the important thing, what happens if we don't turn around? Well, if we sustainably lose this level, the $3,021 level, and if we have a sustained break below that, so that means we break below and we not only like here, dip and then go back up, but we actually go down here and we consolidate here and we have a sustained break. So our new prices, which are consolidating, which are closing multiple 4-hour candles, for example, are consolidating below this mark. What does that happen? Well, that could have some major implications for the entire thesis right here, because that would invalidate this, which doesn't mean anything that we did a wrong analysis or anything. It just basically means that the scenario is not valid anymore and we have to look for new ones. We will, of course, update you with the new scenario once this has happened. We're not looking into that right now because, well, it's just not necessarily that necessary. We have a clear invalidation point for right now for our trades, which we'll get to in a second. But basically know that we think if we lose $3,000, we are in for a world of trouble and probably will see much lower prices and a completely different scenario unfolding. Now, doing a price target for this 5-wave move to the upside is very hard. We cannot really determine how far this will go. What we think this wave 5, which this 5-wave move is a part of, will probably move to new all-time highs. This is where the old all-time high is. We'll probably make new ones, in our opinion, in this region. Where exactly, hard to tell right now, but there is incredible gains. I mean, if we just look from where we're currently to where we could go, it's 60%. Just to the all-time high. If we make new all-time highs, that could be so much more. What are we doing with our trades? We are looking into, we will just wait for prices to consolidate a bit further. We're looking to open a long position in this area here. And then we have a clear invalidation point, and that is just below the $3,000 mark. And we're waiting for prices in order to take profits for somewhere around making new highs, somewhere around, or like new local highs, somewhere 4,400, 4,500, and so on. That's it for this video. If you're interested in learning trading, feel free to check out our website. It's the first link in the description. And yeah, I hope you enjoyed the video. I will see you in the next one. Bye-bye.